Stock markets are off to a roaring start this week, but seeing the moves that we've seen, I have to ask the question as to whether this is a trading bounce or the start of a sustainable move, or is it a head fake or something else. We've seen an explosive start to the markets this week. I'll start with showing the FTSE, the UK 100 here. It has exploded up from about 60.60 to 61.50, carried up through part of the morning, but then overnight, and then since then it's kind of leveled off here in the 61.80 to about 62.40 range. Didn't quite finished off a little bit from its highs of the day, but certainly was still quite a bit higher than where it started the week. There's two big things that are really driving the markets to start this week. One was the shift in sentiment towards Brexit. Last week, a lot of people the Leave campaign had a lot of momentum. That has dried up. We have seen a swing back in towards the Remain side. However, the Remain has taken the lead, but it's only been very small leads so far, still within the margin of error, and flatly it looks now like it could be a really close vote that could still go either way on Thursday night, Friday morning. So we'll see what happens there. Still potential for a lot of volatility this week. And I think because of that, that's why we're seeing that this rally has been contained a little bit. As crazy as it sounds, considering how much the markets are up on the day. We had this gap, and we had this rally, and then we've since kind of consolidated in here between the 250-day, the 200-day average and the 50-day average, so they're still kind of hanging around here. We didn't see it blast up through 6,300. It settled out around 6,200. So whether we get any follow-through on Monday night and into Tuesday or not will be indicative of how sustainable this rally actually is, or is it more of a trading oversold kind of bounce. The another market I wanted to show that in was also in Europe in the DAX, which also had a big opening gap to start the week here, and it's the same kind of action. We saw a big early gap, some moderate advances, but look at this, the gap for the DAX contained by the 10,000 level. It's actually been falling back from that. In addition to the 10,000 round number, also seeing that it was contained here by the 50 and 200-day moving averages, which are just below it. It really needs to get up through these averages to confirm an upturn, and if it does, you may get a golden cross out of that as well. So we are keeping an eye on. If we get follow through, that would be extremely bullish. If we don't, though, that would be quite bearish, especially because you can see this trend line here was broken, now being the extensions being tested as new resistance. 50 on the RSI broken, now being tested as new resistance. If we clear these and go up, quite bullish. If we falter here and roll over, quite bearish, so something to keep an eye on. The other thing that has been moving the markets to start the week were the comments last Friday from St. Louis Fed President Bullard. He went from being a hawk who was calling for 2 rate hikes this year to an ultra dove who's calling for 1 rate hike between now and the end of 2018, so 2.5 years. And you have to wonder what's happened. The markets initially have responded to that, thinking, well, the Fed can be more dovish, that's good for liquidity. Well, that's great for the fast money, but for the longer term, you have to ask the question, if he's flipped from being a hawk to a dove and he's cut his GDP forecast, then his outlook for the U.S. economy isn't very good. That means his outlook for U.S. corporate earnings isn't very good. And if we look here at trading in the Dow, for example, we'll see that, yes, we've had a bit of a pop. Yes, we've cleared the 200-day moving average. The market's been contained here at 18,000. We're still in a sideways trend. RSI still bouncing around between 40 and 60 again, still in a sideways trend. That's telling us we're getting a relief rally here, but it doesn't seem to be a hugely bullish change in sentiment either. So it's something we need to watch for in the coming days. And if we look at the S&P, we'll see the same sort of thing, where it has rallied, but it has stalled a little bit short of the 2100 level. It has more resistance in place near 2112 as well. We can see here it's in the sideways range. Between this low here was about 2050, up here about 2120. Yes, we've popped. Yes, we've regained the 50-day average. Encouraging. Regaining 50 on the RSI. Encouraging. But we're still in 40 to 60 for the RSI. We're still in this trading channel for the index. We're still below 2100.
So even though things are looking good, there's not necessarily enough here to really say that there's been a huge a long-term shift in sentiment towards the bullish side. This could yet be a head fake. This could be a rally, and a bear market rally within an emerging downtrend as well. So it's something we need to keep an eye on over the coming days. With the Brexit vote coming on Thursday, we could still see a lot of volatility. Fed Chair Yellen talks on Wednesday. Again, potential for a lot of volatility, and we could still see significant swings in both directions for markets over the course of this week.